I mean, Bitcoin's not alone here. We know the stock market, anytime the dollar goes up, the stock market is pulling back as well. Basically, any risk assets, which primarily are technology, but also S&P stocks, Bitcoin, crypto as a whole. I'm still in the camp that Bitcoin's got more downside. Again, whether it's 12, 13, whether it's 10, whether it's 15, we'll see. But I'd be hard pressed considering the situation with the Fed, with the inflation. You know, this is that first cycle, the first bear market cycle for Bitcoin where the Fed has not been printing money. And I think you have to take that into account and say, well, why would this cycle be less downside than past cycles, which are been 80 to 85%? So to me, it makes me even a little nervous, like it could go lower than 12, 13, which would be 80 to 85%. So hopefully that doesn't come to fruition. I'm going to start accumulating, continue accumulating in the teens and the low teens, even down below. But I would love to see a bottom sooner than later. But I got to just say to myself, what are the charts saying? The charts are still saying downside. So let's take a look at Bitcoin's chart right off the bat here. Yesterday was looking good. We had a nice bounce. The dollar was falling a little bit. Today, the dollar started to gain strength and it just smoked Bitcoin. And let's be fair. I mean, Bitcoin's not alone here. We know the stock market, anytime the dollar goes up, the stock market is pulling back as well. Basically, any risk assets, which primarily are technology, but also S&P stocks, Bitcoin, crypto as a whole. And that's really what this is at this point. I mean, you look at the dollar, the DXY, and you can see this inverse relationship. And that's not the DXY. There we go. So this is the DXY. It's been in this channel. You see, we hit it here. We pulled back. We're kind of just chopping sideways here. You could make a case it has a double top, but it does concern me that there's still a chance the dollar could pop one more time into this upper band before it starts to come back in. So again, you know, Jerome Powell, he was out there on last Friday with Jackson Hole, and he just smoked the market by basically being extremely hawkish. And that we saw Bitcoin drop. We saw the stock market take a massive dump as well. And this is a market, again, that is worried that, number one, Jerome Powell is going to push us into a steep recession. But number two, they're also worried. They want the free money. They want the drugs, right? The drugs was just printing. Yes. And the Fed is talking a tough game right now. Yeah, probably the biggest one was transitory, right? Yeah, so much for that. But the bottom line is, no, I don't believe them. I think they're talking a tough game. They don't like the fact that the stock market off of its lows rallied 20% in a couple months. That is inflationary. It makes people feel richer, then they spend more money. So they want to talk the stock market down. That's why what we've seen happen has happened. But I do think that the Fed is at a point where they're going to raise 50 basis points in September, maybe another 25 by end of year. And then I still think the economy is weakening very quickly. It hasn't shown in the jobs numbers yet, but we have a big jobs number on Friday. I want to see what those numbers show. If it shows weakening, then I think the market actually might rejoice and rally, which is really messed up, right? I mean, we're seeing good numbers, good economic numbers, and the market is selling off. The market wants a weaker economy, so the Fed gets on the sidelines. Yeah, so I think it's a combination, right? So the Fed, by raising rates, is sucking money out of the system, right? Think about a vacuum. It's going back to economics 101. Less dollars in the system, then the dollars are worth more, right? So that's why printing of money, the dollar should go down. They're doing the opposite right now. The dollar goes up. Then you also have Russia. That's a concern globally. You have China and Taiwan. That's a concern globally. And what we know is, historically, if people are worried about geopolitical events, they go to the dollar for safety. Yes. Now, a lot of people don't understand this, but they're like, oh, but the dollar, it's been printed. We got so much debt here. Yeah, but you know what? Every other country is in the same boat. We're still the ship that's floating the best with holes in our hull, right? So it's still the best out there, and so people are still going there for safety. Yeah, so I think the higher the dollar goes, the weaker the economy. So I think this is absolutely this inverse relationship. And a lot of people, I mean, listen, for average Americans, a strong dollar means we can go to Europe and it's cheaper for us to go to Japan. I mean, our dollar goes further. The negative is for the economy is that a company that sells in countries, right? So let's take IBM. IBM in their last conference call said they took a $3 billion loss due to currencies. And what that means is that they're selling something in Japan and they're getting yen, And by the time they convert it back to dollars, the dollar has strengthened and they're getting less dollars for that. So for instance, it might be a 10% revenue haircut just by that conversion taking place. And so that's really the negative, how it's hurting earnings. And by default, it's hurting, these companies. And therefore, we're seeing stock prices also go down. So generally, I think the mid to long term is hugely bullish for gold, but right now a rising dollar is a negative, right? So we know historically yields, the interest rate going up is usually a negative for gold because gold is versus the bond market, right? So if you can get 3% free, tax-free munis or whatever it is, or government bonds, well, you have to put that against the safety of gold, and therefore gold generally sells off. When the dollar goes up, gold is traded in dollars, so the price of gold goes down. Now, again, I think that by the end of this year, you're going to start to see the dollar fall. People are going to start to realize, investors are going to realize that the Fed is out of bullets, right? So we're going to get into a recession. And how is the Fed getting us out? Because every recession for the past, let's say 20 years, the Fed has just said, oh, well, let's just print money because inflation is under 2%. Print it, print it, print it. That gets us out. Well, guess what? Inflation's not going to be under 2% by the time the next recession hits, whether it's this year, next year, or the next year after that. So the question is, when we get into a recession, how do we get out? My fear is that we're going to be in this long, drawn-out recession. And eventually it's going to get so bad the Fed will start to print. And that's where the dollar falls. That's where gold and silver and metals start to really rip. And in all fairness, I think that's where Bitcoin starts to rip as well, where people finally realize the Fed has lost control. They've lost all credibility. And then you see these assets start to take off as safety measures. Yeah, so I do think Bitcoin will decouple and it'll become more like the digital gold. So this is the gold chart we see before us. But I do think that at some point you do see this change where Bitcoin has been historically that, risk asset. It goes down when markets go down. I eventually think it's going to switch into more of a gold where it goes up when things are scary. Okay. Now, this is the gold chart. And what's amazing about the gold chart is, number one, it's still the best performing asset between Bitcoin and the stock market for the year. I think it's down about 4% or 5% on the year. But basically, look at this trend line. Pivot high, pivot high, pivot high. We broke out. We tested this line again. Now we're testing it again. I think gold's a buy here. I think you're above this line. I think you're going to start to head up. You could even be forming maybe an inverse head and shoulders here if we start to trade up. And again, I like gold here. I think it's a good play. It tells me that the dollar may be topping out. And by the way, that's another important point to make here. So think about this for everyone watching. Last Friday, Jerome Powell, probably the most hawkish he's been ever, right? I mean, it just crushed the market. NASDAQ was down 4% in a day. That's a huge move. And everyone's like, oh, he's so hawkish. They're going to raise by 100 basis points. They're going to continue to raise. Well, go ask the bond market if that's true, because the bond market is the biggest, smartest investing market out there. And you know what yields did on Friday? Nothing. And what that tells me is the bond market is calling Jerome Powell's bluff and saying, no, we don't believe that they're going to be able to raise that much more. And if we go to the 10-year yield, here we go. This is the daily chart. We're not even back to the highs from June on the 10-year yield. That's calling Jerome Powell's bluff and saying, we don't think interest rates are going to go much higher from here. Again, I still think 50 basis points in September, maybe another 25 later in the year. I think that's it. And I think the bond market's confirming that.